This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
Hey everybody, welcome back. Another episode, Real Estate Investing 365. Today I got Gabriel Hamel on here. You guys might have heard him on several other podcasts, including Bigger Pockets. He is in Oregon, and he's a prior service member who has, gained financial independence through creative financing. And I think you're up to 140 or more units now, Gabriel?
Yeah, right at I just hit 175.
175, so even better. Cool. So, well, Gabriel, thanks for being here. I appreciate it. And, we'll dive into all your stuff and all your properties and everything real soon. But why don't you give everybody a little background about you, where you come from, and then how you got started in real estate?
Yeah, absolutely. Thanks for having me on.
Totally.
So around 2002, I picked up Rich Dad Poor Dad and started reading that. It was the first book that I had ever not wanted to put down. So it's the first book I ever read word for word, cover to cover. And, I used to think when I was younger, I didn't like learning. And then when I picked up this book, I realized, okay, I enjoy learning. I just enjoy self-educating, and it has to be a subject that I like. So it was the first book that made sense and that I wanted to keep reading. So shortly after that, in 2003, I was deployed to Kuwait and Iraq. I had actually joined the Army National Guard in '99, my senior year of high school. And so in 2003, I got deployed, and I thought a lot about the lessons I learned in this book while I was deployed. And I told everybody, all my friends that I was deployed with, I said, I'm going to come back, I'm going to build this real estate empire and create this financial freedom. And they said, you're crazy. Why do you think you'd be able to do that? And I said, I don't know how yet, but I'm going to.
Yeah.
So came back to the States in 2004. In 2005, I bought my first house, and I bought that first house with no money down. It was back when banks were giving money to anybody.
Right.
So I, with that first house, I rented out 2 of the rooms, which now you hear a lot of people refer to as house hacking. And so I lived for way less than I could have lived anywhere else by renting out the other 2 rooms. And again, that was 2005. So that was during the subprime. And I thought, this is too easy, no money down. So I went back to the bank in 2006, and they gave me another no money down loan. And I thought, this is too easy. This is easier than the books. I can go back to the bank, every year and buy a house and with no money and just keep doing this, and I'll have a decent portfolio in a few years.
Were you just in the Army still at that time, or did you come back and you had another full-time job outside of that?
Yeah, so I came back in 2004, and I got completely out in 2005. And so I didn't have a job when the bank approved me for my first loan.
Isn't that crazy?
Which is crazy. Yeah.
Yeah.
And you always hear like the horror stories about that, but I still bought well in a hot market.
Mm-hmm.
And in 2006, I also opened up a small nutrition store at the time with one of the guys I was deployed with. He was actually one of the guys that rented a bedroom from me.
Okay, cool.
Yeah.
Was in what part of Oregon?
So I'm in Eugene, Oregon. I'm about 100 miles south of Portland.
Okay, cool. So that was 2006. You got started, and you read that book, and that I have the same experience with you as that book. Like when I started reading it, it's like so simple, but I was just like excited every day. I was just, I read it, but I also listened to it on tape. And it's just like I was so into it. I told my wife and told my friends, like, read this book, you know what I mean? And most people don't, but once you do it, like it's like a light switch going off.
Exactly. Yeah. And people still today, like I meet people that say they just read it and it changes their life. And that book's been out over 20 years now. So
isn't that? It's crazy.
It's not a how-to book. It's just a mindset book, as you know.
Yeah, it's a good storytelling book, right? So that's cool. So
I lost you. I don't hear any sound.
Oh, do you hear me?
Oh, sorry about that. I don't know what happened there.
No problem. You can hear me now?
Yeah.
It's like a Sprint commercial, or what is that, Verizon?
Right.
Cool. So you bought your first 2 houses back in 2005 and 2006. You didn't really have a job, but you decided to house hack them. So your mortgage was at least covered. You made some good buys. You started a nutrition shop. Where'd you go from there?
Yeah. So in 2007, I went back to the bank and tried to buy another house. And they said, yes, but you need 5% down, which I thought was fair. I had 5% from the cash flow and a little bit from the business. So I bought my third house in 2007. And then 2008 hit. In 2008, my store wasn't making any money. So I shut the store down. My first son was born in 2008. And I went back to the bank and said, hey, I want to buy another house. And they said, hold on, things have changed a lot. If you want to buy another house, you need 30% down, which was crazy. I was spoiled with all this no money and 5% down loans. So they said, I need 30% down. I definitely need a job, and I need some proof of income going, backdate in the last couple of years, none of which I had. And
Right.
so I went and took a bunch of odd and end jobs, help wanted ads on Craigslist, and just took all these different jobs until I finally landed an entry-level job in a high school special education class. It was right about minimum wage. And 3 months into that job, I was cleaning shit out of a bathroom stall that a kid threw everywhere. And don't get me wrong, my heart goes out to these kids.
Oh yeah.
But this was not my dream job at all. And so as I'm cleaning this, the shit that's all over the stall, I start thinking about my goals.
Yeah.
And I had this goal of being financially free. And I thought, if I stay at this job, I am going to just pigeonhole myself into this job for the rest of my life. And so I had to decide if I wanted to get real serious about real estate investing or stay at this low paying job. And so I made a commitment to myself that I would replace that income as fast as I could with rental property. And so every day I got on Craigslist and I searched seller financing, owner financing, because I knew the bank wasn't going to finance me. I had to come up with a creative way. And before the end of that school year, I had found 2 duplexes side by side, so 4 units. It cash flowed almost to the exact dollar, within a couple dollars that I was making at that job.
Wow.
So I bought that house with seller financing. I finished out that school year and never worked again.
That's awesome. That's
Yes.
crazy, because most people that are in jobs, whether they like them or don't like them, they have that idea like, oh, I want to get out of here, I want to get away, but nobody ever makes that jump or that that definitive action to like really make it happen. How did you know about seller financing? How did that idea come about?
Yeah, so I don't remember where I had read about it. I had read that there's other ways to finance properties, and asking yourself, rather than no, I can't afford this, how do you afford it? And so I just started searching different ways to finance properties. I knew there was hard money options or private money, but I didn't have those relationships yet. And so I just read something about seller financing and just dug in, just Googling, what is seller financing? And I just found that it's a creative way to structure a purchase. And so that's what I did. And I think one thing that really helped is having that low paying job. The goal seemed very obtainable. It seemed very, if I can replace this income with cash flow, I would be financially free. Maybe not wealthy yet, but I would have that financial freedom to not rely on a job. And so it felt very obtainable. And that's what I went out and searched for every day.
Yeah, no, that actually makes sense now that you say that, because like that saying goes, good is the greatest enemy of great. You got a good job. Like me, I have a good job. And the more I made, I didn't go buck wild and go buy expensive car. I could probably afford most any car I want with my job, but I was reasonable, but my expenses still went up. I got a little bit bigger house, a little bit more expensive toys for the kids and all that stuff. So it just kind of stuck me to my job more and more. So that's actually a good point, that since you had kind of a low paying job, it almost was more attainable, because you're like, listen, I'm only making, I don't know, whatever, $1,000 every 2 weeks here or whatever a month. That's easier to cash flow and cover those expenses. So that's
Yeah,
good point.
absolutely. And I lived very frugally for a lot of years, and it's something that I don't talk about, I don't get asked about much, but those first several years I was living way, below my means. I wasn't buying anything new. I mean, nothing. If I spent $1, it was going towards real estate, and that was it. And some of my buddies would laugh and make fun of me. I was driving these beater cars and all the, and it was the whole, I'm going to, buy assets, or I'm going to buy liabilities. And I just didn't have the kind of income that I wanted to waste it. It had to go towards property.
Yeah, for sure. Can you talk about that for a little bit? So how did you track like your expenses and everything? If you remember, for somebody that's kind of in the same boat and they want to track it better, how did you do that?
Back when I started, I really didn't track it all that much. My only expenses were food and my mortgage. And, those first couple houses, renting out the other rooms offset that quite a bit. And so it's, other than the bare minimums that that's what I would spend.
Yeah, and I guess if you just think about every dollar that's coming in, going out, really, you don't really need to track anything. You just think when you're going out, if you want a coffee, don't buy a coffee or
Yep.
whatever it is, like those little things, right? It's not necessarily something maybe you need to track so much, but just be cognizant of it every purchase, every dollar. So, okay, well, let's break down those first two duplexes that you got. So you decided that you wanted to, find seller financing because you couldn't get a loan at the bank. So how did you go about finding the property, first of all?
Yeah, so I'd go on Craigslist almost every night, and people always laugh when I say Craigslist, but there's a reason that Craigslist works, because you get sellers that don't necessarily want to hire a real estate agent. They want to put a couple sentence ad up and sell their home. So these sellers were actually offering seller financing, but what I would do is every night I'd go on Craigslist and I'd type in keywords like for sale by owner, seller financing, seller terms, owner financing, owner finance, just all these key words. And I put those in every single day. And sometimes things would pop up, sometimes things wouldn't. But this particular deal, they were offering seller financing. And so I contacted them directly and we just started talking about, what terms they were looking for. And most sellers that understand seller financing, they're usually stuck on one of three things. It's usually down payment, price, or interest rate. And it's never all three. And so I looked for sellers that didn't want a large down payment, because I didn't have a large down payment when I got started. And so I found, these particular sellers, they were more interested in that monthly payment coming in without having to deal with the tenants. And so these duplexes were poorly managed, under rented, had some deferred maintenance. And so there was that upside that I had, but I was able to give them a payment that still worked for what the property was currently doing at that time. And so for the seller, they were able to be hands off. They don't have to deal with the property anymore. And I'm happy because there's upside in rents and cleaning up the property to create some value.
Yeah, for sure. Because then it's almost like, since they're seller financing, they're still getting the passive income, but it's just
Exactly.
like eventually, it's going to be your property and they're going to kind of walk away from it. So, how did you know what kind of, you said you asked them about what their terms would be. How did you know how to kind of negotiate that deal? Like, what are some tips for negotiating seller financing deals?
Yeah, because they already wanted the seller finance, and really every single property that I've ever purchased using seller financing, the sellers already understood the advantage of seller financing. I get asked all the time, how do you talk a seller into carrying financing or convince a seller? And I've never had to. It's just finding sellers that already understand the advantage. So then the conversation just comes to, what are the terms of the loan? So these particular sellers, they were just burnt out, tired of dealing with the tenants and being the landlord. They were an older couple. And so I just asked them what was important to them. And for them, it was a monthly payment that they could have for the next several years, which eventually they actually extended the term length, because they were happy having that monthly payment. And a lot of times it's just asking the seller what their needs are. And sometimes, you just don't know. I've had older couples that are willing to carry financing for 30 years because they want their family to be able to have that payment even after they pass away. And so, just asking basic questions and then shutting up and listening to their answer,
Yeah. For sure.
with, go ahead.
Oh, no, I was gonna say, yeah, no, that's for sure. I was gonna say, um, do you ever have properties that you come across that the sellers weren't offering seller financing? It maybe just been for sale by owner, and then you have to like bring it up to them?
Yeah, I'll ask. That's my first go-to almost always. So the reason I like seller financing is there's just so much more creativity. There's so much more flexibility compared to the bank. I mean, when you go to the bank, they're telling you what the terms are. They say, we need this much down. This is the interest rate. You have to qualify and do all these things. But with seller financing, it really is as creative as you and the seller can get. And so if I can find what the seller needs and give them what they need and it still works for me, it's a true win-win scenario. I mean, they walk away happy. I walk away happy. So going back to that first deal, yeah, it was frightening. I'm looking over the numbers going, this works. Like, this pencils out. This cash flows. And then I go, what am I missing?
Yeah.
I'm new. What am I missing? I got to be missing something, because this looks too good. And it wasn't. It's just factoring in the basic expenses of a rental property and looking at the current cash flow. So I knew there was a lot of room to bump up the rent, but I didn't base it on that. I won't do a deal where I have to rely on increasing the rent for it to work. Because if I'm wrong, then the deal's not going to work.
Yeah, for sure. So do you remember the numbers for that deal? What it
Oh
was?
gosh,
Probably
not
not.
it was
I
a
know.
while ago. But
Just rough.
roughly, I want to say, I paid about 180 per duplex.
Okay.
I put down $12,000, but I was able to offset that by the deposits, last month's rents, and prorated rents. So I brought in very little of my own money, and then it cash flowed about $1,350 a month, positive cash flow.
So how much were they renting for each
Oh
unit?
my
You
gosh!
remember?
So the 4 units. Oh gosh, I don't remember offhand. So
Yeah.
the bottom units were these bigger units. They were renting for, when I bought it, under 1,000 a month, like 7 something a month. But I was able to bump them up to over 1,000 a month. And
Okay.
then the upper units were a little bit less. They were smaller units.
So you must have been able to negotiate long-term amortization, right? So,
So
uh,
so I did interest only payments, and so it's actually typical of what I would do. So unless the seller's willing to carry for a long period of time, I typically do interest only payments just so it can cash flow more. And as you
yeah,
know, those first few years, you're not paying much towards principal anyway.
no.
So I'd rather cash flow early, and rather than have a higher payment.
So you negotiate an interest-only payment for a certain amount of years, and then you end up refinancing and then cashing the seller out.
Exactly. So that for that very first deal, I knew they only carried for 2 years. But what I
Okay.
factored in, the math that I did is the amount of money that I brought to the table, which was very little, I would have made that back in cash flow in that 2 years. So worst case scenario, I would have made all my money back. And if I would have defaulted for some reason, which I never planned to, they would have got the property back, and I would have already made my down payment back and then some.
Yeah.
Now, at the end of that 2 years, they wanted to extend. So in 2009, 10, 11, 12, 13, I put together all seller financing deals. Almost all of those were no money down, and I actually made money on some of those at closing with the deposits and rent. And then in 2014, I refinanced all the seller financing deals up to that point with traditional long-term fixed financing.
Okay, cool. No, that's awesome. Can you explain for people that don't know how you were able to make money kind of at the closing table, bring no money in, and then sometimes you get a check back, or like the first deal, you said you used a lot of the rents and earnest money deposits for your $12,000 down. How did you do that?
Yeah. So if you do no money down, say the property's bringing in $2,000 a month in rent, and you have $2,000 deposit. So I would strategically close a little into the beginning of the month, so that I would also almost get another, say, $2,000 a month. And so it would be contractually a no money down deal, but then at closing, I would get the deposit as a credit. I would get the prorated rents, and that's why I would strategically close early in the month. So that would be a larger amount. And then if they paid last month's rent, I would get that also as a credit. So you're talking, if it was renting for $2,000 a month and they had paid $2,000 in last month's rent, and there was the prorated. So now you're talking almost $6,000 at closing as a credit, and that would offset, any fees and stuff as well. So I'd actually walk away with money at the closing table.
Yeah, no, that totally makes sense. I've heard that numerous times. So like a good date to shoot for is like the 5th or the 6th of the month, right? Because
Exactly.
usually rent's due on the 1st. They have a couple of days of late period. So rent's always usually in by the 5th. And then if you take over, well, then you're owed that whole month's worth of rent. So they give it to you. And I actually had another guy on here that closed on like a 30 unit portfolio. And at closing, he walked away with like $38,000 with no money down. He's like,
Yeah. Yeah.
it was amazing.
Exactly. I mean, as you know, when you move into the multifamily stuff, and I've moved into a couple mobile home parks this last year, you're talking 30, 40 units. That's a decent amount of prorated rents and last month's rents and deposits that's going to be credited back to you at closing. And so it's pretty interesting. It could be a big swing when you're talking all those rents credited back.
Yeah, for sure. Okay, cool. No, that's awesome. So you found the property on Craig. You decided to do seller financing. You were looking every night on Craigslist. You were looking all the keywords for seller financing. You found the property. I'm sure you called on a couple, right?
Oh
Beforehand.
gosh, I
Oh,
was doing everything. I was knocking on doors. I was driving for dollars and making lists. I would go to every open house just to meet agents and build those relationships. So, starting off, I didn't know what I was doing. I just know that I needed to meet people in the real estate world. I needed to build relationships and really just kind of learn what the real estate environment was like. And so every for sale sign I saw, I would call, every open house. I would look at a lot of properties that I wouldn't necessarily even be interested in buying, just so I had an understanding of the real estate landscape and what the real estate world was like.
For sure. Yeah, no, that's awesome. So did you end up self-managing this property? I'm sure you did.
I did. So I self-managed my properties up until I had 17 units. And actually, it was that first seller financing deal. I was fixing a toilet in that house at like 10 o'clock at night, and I had young ones at home, and I'm not that handy. And so I had to call a plumber anyway. My hands were bleeding, and I was like, what am I doing? This is taking up my time, and I got to call a plumber anyway, and it's it's taking up my money. And so I had always factored in property management. So at that 17 unit mark, I turned everything over to property management, and it was the best decision ever. I like putting deals together. I like meeting people. I like, finding ways to create creative solutions to the seller's problems. I do not like managing property.
Yeah, for sure. No, that's awesome. I think that's smart. I mean, a lot of people want it. Some people love dealing with the tenants and doing all that stuff. They work themselves. They feel like they're getting the value out of it. But really, if you have, the time freedom stuff, which we're going to touch on a little bit here, that you're real passionate about, or if you just, have more higher dollar per hour stuff you can be doing, just hire that out. And they're much better at it than you anyways. You know what I mean? They got the systems in place. They've done it a whole bunch of times. So that's awesome. Okay. Well, was there any big mistakes that you made during this first, or your first couple, not necessarily this first one, because it was so long ago, but the first couple that you really know to avoid now?
I wouldn't say any big major mistakes. I think, early, early on, it's, you have the fear of like, hey, what don't I know? But I took it on as, the risk of not doing the deal outweighed all the what ifs, all the, what if this happens? What if all 4 units, plus I had the other 3, what if all the units become vacant at once? What if, the house falls down? All these different things that scare people into going into real estate. I believe that the benefit outweighed any of those risks. So, there's things I learned along the way and things I would have done differently, but no major, giant mistakes that would have kept me from doing the deal.
All right, cool. Right on. So you got these 4 units and you kind of moved on. You said you got it to 17 units, ended up hiring it out. What was the next big step from kind of like the single family or small duplexes and stuff? What was the next big asset type that you kind of got into?
Yeah, so I stayed in kind of those small, everything I bought in 2009, 10, 11, 12 were those smaller multifamily 2 to 6 units, all seller financing. And then I wanted a 10 unit building. That was just a goal I set back then. I want 10 units. Mm-hmm. So I bought an 11 unit using seller financing that was about 45 minutes away from where I live. It was also the first property I'd ever sold. And it was kind of a headache of a property, but I got really good terms on the seller finance and it cash flowed really well. And I was able to sell it for a decent property. But ultimately, I got rid of that just because it was taking up too much time and resources. And I wanted to put that money into something else.
Okay. And that property, you said it was about 45 minutes away. So was that your first and only property that's kind of far away from you, or are they all close by, or what?
Yeah, at the time, it was the first property that was out of town. And so I hired a property management company that was local to that property. And they did a great job. It was just one of those properties that were older, and there was going to be some constant maintenance. And I just thought my money could be, put somewhere else for a better return.
Yeah, for sure. Okay. So do you own properties now that are farther away?
Yeah, almost all my stuff is within 15 minutes of me, other than I have 2 mobile home parks. One's 30 minutes south of me and one's an hour south.
Okay. Well, let's talk about how to find properties, because I think for what you're talking about with most of your properties that you found, you were finding them, off-market deals, Craigslist, you were driving by, you were, driving for dollars, seeing the properties, identifying the owners. You would just call them up and ask them if they would be interested to sell. But the farther properties away, were you just happen to be driving in those areas, or did somebody tell you about them? How did you find those deals?
Yeah, I mean, it really comes down to relationships. I mean, it's, and whether it's building relationships with the people that you already know, or just letting people know what you're looking for. And so when I bought that first 11 unit place, that's specifically what I was looking for, was 10 units and above. And so I told everybody I knew, this is what I'm looking for. And The same with brokers and agents. I was telling them specifically what I was looking for. And so that was a listed property that an agent brought me. And leading all the way up to my more recent purchases, same thing. As I've moved into the mobile home park space, it's the same thing, letting people know, brokers, agents, people within my circle, hey, here's what I'm looking for. And, it's, if you don't let them know what you're looking for, they're not going to bring you a deal.
Right. No, that's true. That networking, I mean, every single episode, it comes up over and over again. Everybody talks about it, so it's so important. And I mean, just the way that I kind of came across you to be on the podcast was just over actually Instagram, either Instagram or LinkedIn. I just reaching out to people, and you end up being a very nice guy and love to share your story. So that's a networking right there. So
and
very
if you don't
important.
ask and don't tell people what you're looking for, it's like, why would they bring? You can't assume that that someone's going to bring you a deal. And so I think a lot of new investors are afraid to say, hey, I'm an investor, or here's what I'm looking for. My very second property ever, I had made business cards and told everybody that I met, hey, I'm an investor and I'm looking for a house in this area.
Yeah.
And it was a guy at the gym's friend's dad that was selling that house.
Oh,
and it was off market. And, I bought it way below market value. But had I not opened my mouth and told him what I was looking for, he would have never known.
Never known, huh? That's crazy. That's so good. There's tons of people out there that you don't know what they're, like you're saying, you don't know what their motives are. You don't know what's happening in their lives, and you just got to ask. And some people will tell you to F off or whatever, not want to talk to you, but most of them won't. Most people are nice.
Yeah,
for sure.
Absolutely.
It seems that way. Okay, cool. Well, let's talk about your most recent purchase, because you went from the smaller residential properties to that 11 unit, and now you've kind of got into the mobile home park space. What was your most recent purchase?
Yeah, my most recent purchase was 37 unit mobile home park. It was with seller financing, and going back to relationships and going back to telling people what you're looking for. I reached out to the owner of this park. I reached out to him about a decade before, 10 years before.
Wow.
I didn't know he owned mobile home parks. He was a developer in town. He's building these new, beautiful buildings on campus. And I just thought, I want to know who this guy is. I want to know his story. And so I reached out to him genuinely because I admired his work. And so we met. He told me a story. I wasn't trying to buy or sell him anything. He wasn't trying to, sell anything to me. We just kept in contact. And, we'd meet up every so often and talk about, what we were working on. And so he reached out to me and said, hey, a friend of mine's selling a single family home in the town over. Are you interested? And I said, no, I'm looking for value add multifamily and more specifically mobile home parks. And he said, hey, I have a mobile home park. I would sell you. Yeah. So it goes back to that. Hey, I told him what I was looking for, and he had a park. I had no idea that he had a park. And I said, would you sell our financing? Would you sell our financing? And he said, yeah, I would do that. And so we sat down and hashed out terms, and they were favorable terms. There was some value add opportunity for me. And, he was a sophisticated investor. I mean, he has thousands of units throughout the state. But that's not where his time and energy was. So he wasn't focused on the mobile home parks. He was focused on A-class development. And so even though he being a sophisticated investor, it still created this value add opportunity for me, and it created a true win-win scenario.
Yeah, for sure. Now, does seller financing doesn't work with all sellers, right? Because, or do they need to be mortgage free, or how does that work?
Yeah, it's a good question. So early on, all the small multifamily stuff that I was buying early on, they were free and clear. So I would take, it would be a note and trust deed, and I would take title just like you would if you paid cash for a property or got a bank loan. If there's a loan on the property, you got to structure it a little bit differently. You can do it as a subject to or a land sale contract. And so, you got to get an attorney involved and a little bit more paperwork, but you can still do it even if it's not owned free and clear.
Okay. Yeah, no, that's good to know. Just as long as you get the attorney involved and make sure the seller knows, I'm sure that, what all that means. Because most sellers, especially on single family, small multifamily, they might actually get kind of scared, right? If they're like, I don't know what all this stuff is. And so how do you kind of walk them through that or make them feel more comfortable? I guess you probably don't have to, because...
Yeah, I really don't, because a lot of all the sellers that have ever done seller financing for me, they already understood seller financing. Either they bought properties that way. In a lot of these homes that were paid off, these sellers, it was, they bought them in the late 70s or early 80s, and they didn't use bank financing. So they actually use seller financing. And then same in the mobile home park space, even though there's financing available now for mobile home parks, there wasn't always. And so a lot of these mobile home park owners, they purchased the park using seller financing. So they know very well and are very comfortable with seller financing.
Right. Okay, cool. So this mobile home park, you met the guy 10 years ago, and then it happens to come that he has a mobile home park that he wants to sell. And you're like, well, I want to buy it. So you guys work out, negotiate kind of the terms and everything, and you end up purchasing the property. Now, with this property, was it already managed by a company that he had, or did you put your own management in place?
Yeah, both. So he had a woman that was managing this property, but she
Mhm.
lived far from the property, and there was a lot of opportunity and changes to be made. I think she was busy on managing other property as well, and so I brought my property management team in place. I mean, there were small things like here's an example. There were years worth of leaves covering 4 of the pads.
Uh,
It was $600 to have the leaves removed, and it opened up 4 more pad spaces. Now you're talking, $450 a month per pad. So it just had some value add opportunity in that sense. And there was a lot of little things like that created some opportunity to bring in more revenue.
okay, so what are some of those other value add things for a mobile home park specifically that people can do to increase the net operating income?
Yeah, both the parks that I purchased rents had not been increased in 4.5 and 5 years. And
Okay.
so that's a big one. The utilities weren't being billed back. So those two things alone can have a huge um, net profit without having to outlay a bunch of money. So a small increase on, 30, 40, 50 units can be a lot of, net revenue. And same with billing the utility back. It's pretty common to bill utilities back. And so it's a small impact on the tenants. They're still paying below market rent for their place, but
Mhm.
it's when you multiply it by, say, 40 units, that can make a big difference.
And do you have any pushback when you go to try to build back the utilities to the tenants, or is that not really an issue?
Really not, because the both parks that I bought, the rents were so below market rent.
Uh-huh.
So doing a small increase, they're still below market rent.
Okay. Um, and then you said like this park, for example, that there was 4 spaces that were just totally covered in leaves. How do you go about finding new tenants for that? Do they bring in a new mobile home, or is it their existing mobile home? Like, how does that work?
Yeah, so a lot of the both parks are mobile home and RV rentals, and RV is getting almost as much rent as mobile homes, but they're a lot easier to move in.
Hmm.
And so one of the things with both these parks is there wasn't a lot of active advertising, and so it was just a sign, and you'd get the occasional person calling, and so having our my property management team actively put for rent ads out makes a big difference. I mean, that's what property management should be doing, and so that makes a big difference. And there's a lot of people looking for pad space, and so it's not a problem to fill those up.
For sure. No, yeah, definitely. What do you find that is your biggest headache with owning RV parks? Is because they're not always like the lower end, clientele, but maybe sometimes they could be. So, what would be your biggest problem?
I think just having that many people live in close proximity, but
Yeah.
it really hasn't been too much of an issue. So, you know, any issues the property management's dealing with it. I've chose not to have an on-site property manager, but with both parks, these are people's homes. It's where they live. It's their community, and there's enough eyes and ears that if there's something going on that shouldn't be going on, they're really good about calling the property manager and letting them know.
Okay. So your property manager isn't on site. Is there like a certain unit level you think that on-site property manager kind of comes into play?
Yeah, I actually thought so. My first park was 43 units, and the second one is 37. I thought that I would need an on-site person, and so when I bought that first park, I had asked the seller, is there someone who lives on site that you would recommend as an on-site? And he said, I really wouldn't, but everyone's kind of the eyes and ears and look out for each other. And I thought, that could be interesting. We'll see. And it's actually worked out really well. If there's a problem, if there's something going on, and say a tenant's playing loud music late at night, they're going to call the property manager, and the property manager is going to take care of it, because they care about the community. This is where they live. And so both parks, they do a good job of looking out for each other and the park itself.
Cool. No, that's awesome. Was it a struggle to get your property management company to come in and take over an RV park, or because they probably did your first RV park, but had they done RV parks before? Or you're just like, hey, listen, I'm going to do this, and you manage all my other units. So can you do it for me, or how'd that work out?
Yeah, so they were a newer property management company, and the way the kind of the backstory there is, the owner of the property, before they were a property management company, they had represented me as an agent on both the purchase and on the sale side, and they did a killer job. Now, just because they're a good real estate agent doesn't mean they're a good property management company.
For sure.
And I was having some, and became friends of mine. And just because they're friends of mine doesn't mean I'm going to hire them to manage my property, or have them as my agent. But they did a phenomenal job representing me on the agent side. And they were talking about building a property management company. And I was having some struggles with my current property management at that time. And so what I did, as I started buying properties that they represented me on, I would turn those new purchases over to them to manage. So it started off with just a handful of units, but they were doing a really good job. And my hesitation at first is, hey, they don't have property management experience, but it actually turned into a really good thing because they don't have all these years of bad taste in their mouth or bad habits of property management companies that have been around. So we sat down, they said, hey, what's worked, what hasn't? We want to be a good property management company. And they took it on that way. And so they were doing a killer job on these new purchases that I had. And I eventually turned all my properties over to them. And they continue to do a good job. Now, shortly after I turned about 100 units over to them, I bought a mobile home park and, kind of put that on their lap. And shortly after that, bought another mobile home park. And so, they've stepped to the challenge and have done just an amazing job. I think a lot of property management is about being a people person. You're dealing with people, you're dealing with tenants, and they want to be heard, and they want to know that you're taking care of them and that you're helping them solve their problems. And my property management company has done a phenomenal job.
Yeah, no, that's true. I like what you said, how they're kind of a newer property management company. I do like that approach. I don't think that always the old established, like even if they have tons of reviews and everything, they're probably good too, the older ones. But the newer ones, it's kind of like going out and getting a new real estate agent that's on a good team. You know what I mean? They're like hungry. They like want to build their portfolio. Yep. They want to do a good job. So then you tell your friends, and they're trying to grow. So those, sometimes I feel like those are kind of like the best ones to get, really, is the newer ones that are striving to excel, so.
And they've really stepped up. I mean, I put a lot on their plate quick, and they're quick learners, and they've adapted well. And I mean, they're just doing a phenomenal job.
How do they charge you for a mobile home park?
So it varies. So it's the parks I pay 5%, and my other properties it's 7%.
Okay, cool. Right on. So this park that you have, this most recent one, I guess both of them, is your plan to stick with the seller financing for as long as you can, or do you have like a due date that you're going to end up refinancing? Because Fannie Mae, I think, is doing like mobile home park loans now, right?
They are, yeah. And so I have really good terms that I'll stick with. This last park, it was there's a 5-year balloon, and I will probably keep these terms up until close to that 5 years, just because they're phenomenal returns and it cash flows well.
Yeah, and then you'll refinance into a regular financing. Correct, with the bank or something. Okay,
exactly.
Cool. Right on. Now, do you think these strategies that you've gone about to get all these properties over the last 10 years, do you think they're all still valid today in today's economy where everything's at?
100%. Yep, absolutely. Absolutely. Okay. And I'll hear people say, oh, seller financing's dead. You can't do seller financing anymore. I just bought that mobile home park with seller financing a few months back. And so, the thing is, there's advantages for the seller to carry. So one of the advantages is if you pay a seller off, they're getting a huge lump sum of cash, and they're having to pay all that capital gains up front. Mm-hmm. Then they're stuck with this money. Now it's not a horrible problem. I mean, having a big lump sum of cash is not the worst of life's problems, but they have to go put that somewhere else to earn a return. They don't, men and women in their 60s, 70s, they don't want to go throw that money in the stock market and just hope that it's going to do well. They don't want to actively go out and invest. They want that passive income. So the seller financing gives them an opportunity to be the bank. They get to be on the other side of the transaction. They get to sit back. They get to earn interest on their money. And, they have literally mailbox money. They get a check every month for being the bank, and they're earning interest on the equity that they've created in that house. And so that's a big reason why sellers would do that.
Well, yeah, and I think one thing too is like if let's say a seller is going to sell a property just for simple numbers, and they're going to sell it with an agent, and they're going to sell it for 100 grand. They think they can get 100 grand for it. Well, if you come along and you say, well, if you do seller financing, I'll give you 90. For one, they're not going to pay the commission, but for two, you're going to pay them interest for a certain amount of years. So over the
Exactly.
interest, they're probably going to end up making more than the 100 that they originally were going to sell it with an agent for. So if you can
Exactly.
get them to understand that, because I did seller financing, I bought one single family one time, and I was thinking every month I'm paying this bill, they're getting 5.5% interest on this
Yep.
$350,000 loan that they gave me, seller financing. I'm like, man, after I pay this off, they're going to actually make quite a bit of money on it, so
Right. Yeah. And if they carry for, long term, then, they're earning a lot of interest. And you
yeah.
just never know why, and until you ask the sellers why they're selling or what terms they're interested in, then you just don't know, the reason. So the reason I had a seller, I think I mentioned this earlier, they carried for 30 years. They were in their 70s, but they carried for 30 years because they wanted their adult children who were around my age to get that check every single month, even after they passed away. So they get all the advantages of real estate without having to be a landlord, without having to go in there and figure all these things out after their parents passed away. And so, early on, would I have thought that someone in their 70s would have carried a 30-year fully am note? No, I wouldn't have. But you just don't know until you ask, because
Yeah.
every seller's in a different position. I had another guy, he's also mid 70s, carried for 15 years. He has no children, no anyone to pass it on to. And what he said is he just wanted to make sure that he had a steady check coming in every single month until he died. And that was
Oh,
his motivation. That's why he wanted to structure it that way.
gosh, it's kind of sad. I don't know, a little bit, but it's smart for
A
him.
little
I
bit,
mean,
a little bit. Yeah.
a little bit sad, but so in that case, just as kind of a tangent, but in that case, what if he passes away before you're done paying him? What
I
happens?
yeah, I think he has some stuff set up where it would go to a charity. Not so it's not like it would just disappear and I would own it free and clear.
Yeah.
Yeah,
Which is good. I mean, that's probably something, you're such a nice guy. You probably do the same thing anyway. So
absolutely,
yeah,
absolutely.
no, that's cool. All right, cool. So one thing that you always talk about, I follow you on your Instagram and all that stuff, is your time free.
Thank you. By the way,
Yeah, I mean, it's great. I love following people that are motivated, young, and healthy, and in shape, and doing good things. So you always talk about your time freedom. Explain what time freedom is, and then why it's important to you, and why it should be important to everybody.
yeah, time freedom. The reason I obsessively talk about time freedom is I just think it's valuable. It's doing what you want, when you want, how you want, where you want, and the reason I started talking about time freedom is really I just felt like it was a conversation that wasn't being had. And so what I mean by that is, you hear a lot about financial freedom. And early on in my journey, I read Rich Dad Poor Dad, I read some of the other real estate investment books, and they're all talking about financial freedom. And early on, as a young investor, I'm going, I'm going to be rich. I want to be rich, and I thought about,
Yeah.
I don't want to be throwing dollar bills around or swimming in a pile of money. I realized what I want is time. I want to be able to do whatever I want whenever I want. And I would get in conversations with people that said, man, I just want to make more money, or I want to be financially free. And as I'd have these conversations and dig into like the whys and the reasons that people wanted financial freedom, it always came back to time. I want to be able to time to travel. I want time to spend with my family. I want time to focus on my health. It was all these other reasons. It wasn't about the money. It was what the money and the financial freedom allowed them to have. And so as I've scaled my business, I've just been really conscious of asking myself, hey, how does this decision affect my time? So when I hit that 17 unit mark and decided to turn everything over to property management, it was a decision. Do I start a property management company? Do I hire employees? Do I build out a property management company? Or do I hire property management? Well, which one's going to affect my time more? Well, one's going to free up a lot of time, and one is actually going to take more time. So if I'm dealing with employees and running a business, that's going to take up a lot more time. As I've scaled and thought, do I want to syndicate deals and raise capital, which is sometimes the next step? Again, I went, well, how will that affect my time? And so I'm just real conscious with, how does it affect my time with my family? How does it affect my time on my health and my happiness and on the freedoms that I have? I've met some people that have built amazing large businesses because they wanted more time freedom and they actually have less of it. And so now they're saying, okay, how can I restructure things to gain some of that time back? I've built this amazing beast of a company, but I forgot about the why I was doing it in the first place.
Totally. No, I totally understand. I totally agree with you because, we had talked for a second off air, but for listeners, like this episode that we're recording, I had to I canceled it and then we rescheduled earlier, whatever, because I was like, had some stuff come up at work and all this stuff. And that's exactly what just like drives me crazy is the fact that I don't have the time freedom I want. And it's not necessarily, it's probably going to be several years for me myself when I leave my job until I make what I'm making at my job. I might never make what I'm making at my job on the side, passively or from real estate investing, but the time freedom will be there. And then once you get that time freedom, you're happier, you're less stressed out, you're able to work on things that kind of energize you. And then all of a sudden, these things you might actually work as much as you were working a full-time job, but you might love it, right?
Exactly. Yep.
Your mind is just happier and you're just like doing things more productively. And then that ball really gets rolling. So
And occasionally I'll get at, I'll have people reach out and say, well, what if I like to work? What if I like what I'm doing? And I say, that's great. Like you should enjoy what you're doing. It's more about, if you have a job that you love, great, keep working. It's more about the ability to not have to. If that changes one day or you get hurt or at work, do you have enough passive income to support you otherwise? I've met people that love what they're doing, but they create enough passive income that they work on their terms. They're not there because they have to be. They're not trading, every day for a dollar. They're there because it's a passion of theirs, not because they have to.
Totally. And what might happen is if you might think you hate your job because you have to be there, and then you start building up passive income, like you said, and then you don't have to be there, you might end up liking your job more because you're like, oh, this is like a choice I'm making. Let me just stay here.
Exactly. So and that's 100% what time freedom is about, is just having more choices in your life.
Right on. Cool. And then I also know you're really into like the health part of it. And I usually, not every episode, but I often ask, what is like a mindset tip people have for, staying motivated and staying on track with their stuff. And for me, it's health and working out and like staying active and going outdoors and all those things. I think you're in the same mindset. So can you talk a little bit about why you think the health aspect of your personal life is just as important as the investing side?
Yeah, I think health is valuable for so many reasons. I want to live as long as I can, as healthy as I can. I have a 9 and 11-year-old, and I want to be able to run up a mountain with them. I want to be able to play with them, not just be on the sidelines watching. I want to be able to at 90 years old cruise up a mountain or travel and actually enjoy the things that life has to offer. And so I like to push myself physically. I think it also helps mentally. I do some high intensity training stuff, and it's just as much mental, if not more so, than it is physical. So it's good for my body, but getting to a point where your body's telling you to quit and mentally you're saying no, you're going to keep going. It plays out in other areas of my life.
Yeah, for sure. That's a huge thing, is like making yourself do hard things. And it's not just hard things, it could be anything, but like working out or whether you're doing cold baths or something like that. It's just like nobody wants to do those things. Even the guy that's like the most fanatical CrossFitter dude or bodybuilder guy, I bet most of the days they don't want to work out. They really don't, right? It's just like, but you force yourself to do it. And then that like translates into everything else. And if you guys don't know, make sure you follow Gabriel, because this dude's jacked and he'll run up the hill faster than all your kids. So
thank you.
That's an awesome thing.
Well, and that's, what you just said about like the days that you don't want to, that's just the biggest difference between, desire and then discipline. It's like, there's days that I want to, and I'm excited to go work out. And there's days that I'm not as excited, but the biggest differentiator is I'm going to go either way.
Exactly.
I'm going to go whether I want to or not. And so I think it's easy for people to say, oh, I want to get in shape or I want to be financially free, but you do it. You make decisions based on not how you feel. You commit to yourself, and then you have the discipline to stick with whatever it is that you say you're going to do.
For sure. No, definitely. Cool. I do know you're in a kind of a group, a GoBundance group, and there's many groups out there, whether it's a men's group, a business group, whatever it is. What do you think? Obviously you think it's important. Why are those types of groups important? And what do you say to somebody that maybe, financially they're not 100% secure? Do you think it's a good job to search out those groups and try to join them? Or what do you think the options are for those type of people?
Yeah, whether it's a formal mastermind group or not, I think it's just important that you're careful with who you spend your time with. And so I want to make sure that the people I'm spending my time with are pushing me in all areas of life, that I can add value to their life, but they're also adding value to my life. And I realize, and I think in the real estate investment world and entrepreneurial world, a lot of times kind of a lone wolf and you're doing your own thing. And, you often hear you're the sum of the 5 people you spend the most time with. And for me, outside of my family, there wasn't a lot of people in my life that I could talk to about my investing without it sounding like I was boasting. I didn't have really anyone to share my successes with. I didn't have anyone to, share maybe an area that I was struggling in. And so to surround yourself with people that support you, in whatever area of life that you want that support in, I think is extremely important. I mean, I joined the GoBundance group a little over a year ago. And I can honestly say that the relationships that I've built over the last year and the people that are, in my life over the last year has just been amazing. I mean, they're some of the closest friends that I would say I have. And, never would have thought. I knew it was something that I really wanted. I didn't realize how much until I started surrounding myself with people that really, really helped push me.
For sure. So if somebody's out there and they're kind of questioning it because they think it's kind of expensive, whatever group it is or whatever, I mean, what do you say to them? Do you say like just that, the return on their investment is far outweighs the investment itself, or what do you think about that?
Yeah, it just comes down to relationships. So if someone doesn't have the money to be in an expensive mastermind group, find someone that you can add value to in some way to their life and start surrounding yourself with those people. So it doesn't have to be an expensive group. Find some people that you look up to, that you admire, and see, is there something that you can provide for them that would add value to be in line with that person. Because it really is important. If you're hanging out with a bunch of people that, every time you talk about, you're going to invest in this deal, they're like, oh, that's risky. I don't think you can do that. I don't know. They're going to bring you down. And it's the same with, say, working out, or, the health is, you're hanging out with a bunch of people that are like, you don't have to go to the gym today. Don't worry about it. Let's go grab a beer and watch a movie. And that's every weekend. That's what they want to do. That's going to affect your life very different than if you have people around you saying, all right, let's do it. What's your goal? Let's get your weight down, or let's get, whatever that, goal you have in the gym.
Yeah, totally. I heard Ed Milet say, if you're around people that are always talking about the past, or even people that are just mostly talking about the present, you need to don't just leave them for good, but you need to find people that are talking about the future and like where they're going and where they want to go. And that'll help you build your own future success as well. So
yeah, Ed Milet's he's a badass. He was at our event in Aspen last week. So got to meet Ed, and he shared some, awesome. A lot of knowledge and some amazing stories.
That's so cool. That's awesome. Yeah. Thing. Okay, cool. Well, where's Gabriel headed from here in your real estate investing career? Are you going to continue to buy bigger and bigger complexes or mobile home parks? What's your avenue that you're going to go after?
Yeah, I want to keep buying. My focus is value add mobile home parks right now. And I plan to do that. I plan to double my unit count this year. And so, as long as that, I get asked sometimes like, when's enough? But as long as I enjoy it, which I enjoy the process. I enjoy building the business. I enjoy putting the deals together. As long as I enjoy it, I'm going to keep doing it.
For sure. Well, one quick question about that is you can't, I'm sure you're not just getting all these, you're not going to double your units this year just by merely putting the vibe out there and talking to people. Is there other ways you're trying to find the mobile home parks and then contacting the owners? What are some ways to actually find where is a mobile home park? Because you can't just drive every street in the state and say, oh, here's a map and here's where every park is. How do you find them?
Yeah, it goes back to the building relationships and letting people know. So I've let a lot of brokers know. I let a lot of people know, and a lot of mobile home parks are coming across my desk. Now, most of them, like any real estate deal, that doesn't pencil out. Mm-hmm. But the more people that you let know, the more people that are gonna bring you the deal. And so, saying yes, I'm gonna buy mobile home parks. There's that level of law of attraction, but I also believe there's the law of action. So just sitting back saying, oh, I'm going to buy another mobile home park. Do I think it's just going to magically appear? No. But putting that out in the universe and then actually taking action on making those calls and talking to people and letting them know, I do think that those kind of actions will create opportunities to buy more parks.
Is there a site or something you use to like look up the parks and then you say, oh, I'm going to call these owners directly?
Not necessarily. So I will make lists and stuff on particular parks. I haven't driven the entire state, like you said, but there's some areas that I like, and so I'll focus in on parks in those areas, and then also there's some brokers that specifically work at finding mobile home park deals. So building those relationships too.
Okay, cool. Right on. Well, we'll kind of move to the last little section here. And what is your favorite resource for learning about real estate? You had to learn about mobile home parks before you got into it. So was it books or seminars or podcasts? What's your favorite resource?
I like podcasts. Early on I was reading a lot of books, and then kind of transitioned to audio books, and I didn't find Bigger Pockets till years and years later. So I think that's a great online resource. There's a lot of people that post a lot of things about real specific real estate transactions and asset classes within real estate. That wasn't a resource that I had when I started, but I think it's a great resource. And just reaching out to people that are doing what it is you're doing. Early on, I would ask people. I'd ask lenders questions. I'd ask real estate agents questions. I quickly learned that most real estate agents don't invest in real estate and are not investors. But just asking questions of people that are in that world until you find people that you can learn from.
Right on. Cool. What about a favorite piece of technology or app that you use that makes your life, gives you more time freedom?
Sure. There's not just one app that I use. I still find some of the greatest deals off of Craigslist on the non-listed properties. Just kind of the and really less than an app. I know I've said it 100 times, but relationships. If you have a good relationship with an agent or broker, they're going to bring you a deal before it goes live.
For sure. No, definitely. Cool. Right on. Well, where can people find out more about you, follow you, website, anything like that?
Yeah, the best way to get in touch with me would be through Instagram. It's Gabriel R. Hamel, or if you search Gabriel Hamel, you'll find me.
Okay.
I'm on Facebook too, and then my website's hamelinvestments.com.
Cool. Right on. Well, Gabriel, this was a energizing and motivating podcast, which is cool. You're an awesome dude. You're doing good things. So I appreciate you being here. I'm sure the listeners learned a lot, and you guys go out and follow Gabriel. He's got lots of good content on his Instagram for sure. And he's an awesome dude to look after. So Gabriel, thanks again. I appreciate you.
Yeah, absolutely. Thanks for having me on. I appreciate all you do.
Man.
You too. Bye.